Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 13th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Not a whole lot, really, despite the fact that there's good economic data being released. We're just not really seeing a whole lot of the economic data that really drives the markets. That really starts picking up tomorrow with CPI and a couple of other things, FOMC members speaking, inflation expectations, and a few others. So tomorrow is going to be a really good day for economic data. Today, all we got really so far is a couple of things across the pond. So let's talk about it. It's not their flash estimates. So across the pond, we did get some CPI numbers and PPI numbers, but again, it's not their flash estimates. They all came in slightly under what was expected. So that might give us a little indication as to what's going to go on with their flash estimates. But as of right now, pretty close to previous economic data points, just slightly off if they are off to the downside. Then let's look back here in the United States. We got the NFIB, which is the National Federation of Independent Businesses. It's a small business index. Kind of gives you a look into the small business owners' mindset as to what he believes the economy is doing. It came in at 107.4, expected to be 106 even, so nicely beating on that one. And then, of course, like I mentioned, we start having all of the Fed governors speaking. We got Bernard speaking right about now, and that's about it for the most part. Then tomorrow we get some good economic data. Right now, the markets are really trying to figure out which direction they want to go. I talked about it. Equities are going to probably be right in and around where they are right now. That's even after yesterday's move. It brought pretty much across the board, aside from the Dow Jones Industrial Average, back to that point of control where I've been talking about. On the other side of the coin, we've got light sweet crude here. Crude oil futures moving down again today. $57. We're out of that 60 handle as of yesterday. Settled in the 50 handle. I talked about this. Some people were calling for $40 oil. I think that's way overdone to the downside. I even think we're a little overdone to the downside here. I expected us to stay within that mid 60s range with the way that the economic picture is looking. I think that that's about the tipping point for the supply and demand, feels like to me. That being said, the market's pushing this a lot lower. Just like when we were up at that 75 handle, we were overextended to the upside. I think we are overextended to the downside at this point in oil. But having said that, I'm glad I got out of my USO the other day because it would not be looking too good. As a matter of fact, we could probably take a look at a chart on USO and see that that was breaking down. I think I had the 12.5 puts on there. That being said, I'd be in the money at this point, so glad I got out of those. And then gold futures, trying to find a little bit of support here around that 1200 mark. I've talked about this time and time again. That psychological level of 1200 will be defended by those gold bugs relentlessly. And as of right now, we are defending that area to that point. So yesterday, you can see we came down and tested it, kissed it at least, and then have since today kind of broken that level and then since brought back above. That's a pretty strong area, I think. And the way the market's action is happening today, I think it's actually a pretty good bullish sign. Now, bonds are coming off a little bit with the equities trying to peel higher, but we're back into the value area with the bonds, which is where I believe they should be, even if it's just in and around where we are now. I think that price is being accepted here. I think that people realize that the Fed is probably going to hold off for at least a few more meetings to see how all of this economic data shakes out, and that would cause lift to the bonds as interest rate expectations increasing, that level of possibility decreasing on an interest rate increase brings the bonds up. Because remember, as interest rates go up, bonds go down. As interest rates go down, bonds go up. Well, we aren't really seeing interest rates go down at this point, but what we're seeing is that lowered expectation of higher interest rates should cause the bonds to move higher, all right? And I believe that's what we've been seeing the last couple of days. All right, then on to the VIX. VIX is moving in negative territory after trying to test the 20 handle. Earlier this morning, we started seeing the markets come off a little bit right off the open, but we're starting to see some market action to the upside. Let's look at the Dow Jones Industrial Average. As you can see, we moved into positive territory, making a nice little bottom here, back down into the value area. Now, this is what I was talking about. The Dow Jones did not go down and test the point of control, which lines up with this Fibonacci extension, the 23 Fibonacci extension, very well. That's all should act as a magnet in my eyes. I thought we might be able to reach that today, maybe come down a little bit further and test that. But with the other equities moving higher, the Dow Jones is not going to have that much of a push to the negative side. So we can see with the NASDAQ up 100 points today, retracing about half of yesterday's losses. But right now at the point of control where the most time and volume has been spent over the last 52 weeks. So that is where people have found value and are going to be comfortable. So NASDAQ moving back into the value area, similar with the E-mini S&Ps, came down to the point of control yesterday where the most time and volume has been spent. Today spent a little bit of time there, mostly overnight, but off of this opening, we are near the highs of the day, as we'll be able to see here on the 30-minute chart of the E-mini S&Ps. Each one of these blue sections is an overnight and a day session. Overnight session, as you can see, came in, kind of gapped up as I wouldn't really say one would expect, but with that big of a sell-off, especially late in the day, those shorts from the day session were probably dying to cover on the open, and that's what we sell out with a pop higher. And then consolidation as the market tried to figure out a direction, sold off into the open, and then with the economic data, you can see we started moving higher and are near the highs of the day. So not a whole lot of directionality. A lot of people probably shoring up positions ahead of tomorrow's big economic data day. So probably a lot of juking around going to be happening today. Now, late in the day, sorry about this. Yesterday, I thought it was going to be a pretty quiet day, being Veterans Day, and thank you to all those veterans out there that have served the country to keep us, the rest of us, safe. We will never forget. And that being said, I appreciate it, all that you do. And I thought it was going to be a quiet day. The market really started selling off. I thought that there were some levels that I needed to take advantage of with that sell-off just being overdone. One of them being GE. Everybody talking about GE yesterday. Pretty bearish on it. I decided I just couldn't wait and had to sell something in there with the high implied volatility. Market really overdone to the downside. I think these levels were last seen in like 2008, 2009 area or something like that with GE. So I think it's a good opportunity to get in there. I don't think GE is going bankrupt, and at $8 a share, it's almost a no-brainer at this point, especially for options. So I went into the D's and I sold the 8 puts in there, which is basically at the money. It was maybe a half a 25 cents out of the money at the time I put this on. And I sold the, like I said, the 8 puts in there for 60 cents. Little up move today, a little volatility coming out, helping me. This morning it wasn't looking so great, but with the market moving, some vol coming out is going to help. So I'm short the 8 puts in GE as of yesterday afternoon. I tweeted that out as well. And then eBay, I decided with this eBay trade, we were kind of rolling over a little bit. I missed my opportunity at those 26s. I wanted to buy 26s. I never really had the opportunity. I sold to 26 puts. But having said that, I decided with the high implied volatility in the position that I have on, I wasn't going to miss an opportunity yesterday to maybe buy it at 26. Best case scenario I could find for a good premium was in the December selling the 27 put. So I ratcheted up just a little bit and sold those for 38 cents. And again, you could probably do those a little bit better, as you can see with the market. If I did those yesterday, the market is probably a little bit better for you today. I'm not going to add any unless we saw it come off a little bit more, maybe sell some 26 puts or 25 puts, but that's not the case as of right now. And I'm trying to get out of some of my Philip Morris. I have on the D's 95 calls in there. I originally sold those for around 72 cents, I think. It's right at around 50% of my max profit, trading around 36 cents. I'm working a 31 cent bid as of right now. So looking to get out of that, but have not gotten hit on the Philip Morris short calls. But you can see with the market action moving lower, I have a pretty good opportunity, especially if it tests this Fibonacci area that I have left over from last year as the 52-week low. But it should still come in, as you can see, as a support and resistance, and it has. That's why I leave those Fibonacci's up there. If anybody ever had a question, I leave Fibonacci's on there, even if the 100%'s been broken or the zero at the extremes, because they will still hold those levels for support and resistance, at least in my experience. And that's about it for today. Check out Thursday's webinar. It's going to be on synthetic short. So if we continue to see the bearishness in the market, it's going to set up for great synthetic short opportunities. All right, especially when we have around this mid-range. What do? We buy it or sell it because it's mid-range. It's kind of a gray area either way. This is a great opportunity to set up a short. Synthetic short or synthetic long for that matter. All right, so check it out at protraderstrategies.com. Find out all my rules for that. Give me a thumbs up, thumbs down on this video if like or dislike. If you dislike it though, make sure you let me know what it is about the video that you didn't really like, and maybe I can do something to change that for you and everybody else. All right, so if you can't take that, take it easy.